Hello, John here from forecastfortomorrow.com. I want to thank you for joining with me today. A lot of our members have been asking for a market update, so that's what we're going to do quickly here today, the 30th of June 2012. Well, it has been quite an interesting week, and there was a lot of major news coming out of Europe with the crisis going on over there, and also Thursday, Friday's trading on the S&P 500 was very interesting. We will get to that in just a moment. What I want to do right now is take a look at the bull bear market indicator. As you can tell, this is an indicator that I use. It gives you a longer term picture of what the market is doing and to give you a clearer picture of which direction you should be taking. And a few months back we were actually telling our members not to fall in love with the downside. Here in 2009 and through 2011, the market is still in a bullish stance. There's been nothing even with that little downward draft over the last couple of months to tell that the market has changed to a bearish stance. So we are still in bullish market conditions, and I remember the message being and telling our members a long time ago, not to fall in love with the downside. There's all these analysts and many people out there saying the market is about to sell off or crash and crumble. Well, that is not the case, I believe, in the short term, and also for the rest of 2012. I think it is really important right here, again, just to tell people, that basically you have to listen to the market and let it tell you what it's doing and then participate. There's too many other people right now out there screaming and telling the market what to do and anticipating what the market is going to do and not actually listening to what the charts are telling them. But anyway, myself as a trader and also an analyst, there have been some very significant moves on the market over the last few days. If you have been watching, it's pretty obvious. So let's now go and take a quick peek at the S&P 500. Okay, taking a look at the S&P 500 daily chart. Wow, has some very interesting patterns here developing on the S&P 500. If you want to take a look here on Thursday, Friday, we've had a very large rally. Almost over 50 points there in a couple of days, and there are leading into the 4th of July holidays in the US. We do normally see some sort of market reversals. We are now seeing that going into the start of July. But overall, what I want to say here, guys, is again, I must emphasize that you mustn't fall in love with the downside. And it's very interesting to see here that even if you want to talk about the market profile, just have a look from May all the way to June. It's taken weeks for the market to actually sell off and come down lower. But only the space of a few days, maybe a week, for the market to erase all those gains and come back and hit a level that we saw maybe back in April of this year. So again, I want to reiterate, do not fall in love with the downside. There's a lot of people out there calling for a market crash and a big sell-off, but again, with that bull bear market indicator, we are clearly in a bull market, and Thursday, Friday of this week basically confirmed that. You can see here back to March, April, see how there's support level. The support levels here on the market are now actually becoming resistance here, and we've actually sort of broken through that on Friday. Like I said, a very big day, a very good day for the bulls on Friday, and we closed at the highs, which means next week there is a likelihood of prices continuing north. And from the halfway through May, we're sort of looking at a short-term rounding bottom there, and even though the charts have been messy, from the halfway through May, you could probably call this little pattern here an inverted head and shoulders, and now we have clearly broken out of that region there. So it's probably likely we're going to go up, and on the target of that inverted head and shoulders, it's basically looking like we're going to hit that 1400, and that's what I would be calling the target off that inverted head and shoulders. So we are at 1359, 1360 level right now at the close Friday, and we're very close to that 1400. That would be the next target, 1400 level, and probably even higher. Statistically, July, or the start of July, the first couple of days of July, is quite bullish and quite strong. so that even adds to our case here, and it's quite important to note, there's a lot of stops up there that could be hit, and that'll send us up even higher. So again, I want to reiterate the fact that this is not a bearish market. We're still in a bullish market, and the dips have been bought. Don't fall in love with the downside. Keep watching those targets, keep your stops in place, and hopefully this analysis helps and it gives you some sort of clearer picture of where we're heading in the short term in the coming weeks and months. Anyway, that's my quick analysis here. Thanks for listening, thanks for watching. Don't forget to check out our site. That's www.forecastfortomorrow.com. That's www.forecastfortomorrow.com. Thanks for joining with me. John here signing off. Have a fantastic weekend and good luck with your trades next week.